What is good, Tesla family? It's Ray J back with another video, and in this video, we're going to be talking about the one and only Tesla stock and some very important things that you need to be looking at. Guys, I'm going to do more technical analysis in this video, and I'm going to talk a little bit about some articles that are very important, but more about the charts. Now, before I say anything about Tesla's chart and what's going on and what I expect for next week, I do have to mention some very important things first. First off, I'm not a financial planner, guys. This is all for educational purposes only, and also, if you guys can, please smash the like button if you want to see more videos like this. And not only benefits me, benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Moomoo link down below and in the description. If you do sign up for Moomoo and deposit $100, you will not only qualify for up to 5 free stocks, each worth up to $3,500, but you're also going to qualify for free real-time level 2 data for US stocks with $0 in trading commissions. So please check that out if you guys want. And with that out of the way, let's get on with the video. So guys, Tesla is in a dire situation right now. No, I'm not trying to spread FUD and scare anyone, but I do need to be very serious with you guys about what's going on with the market. So currently, Tesla is trading below its moving averages. Every single one, whether you look at the 5 or the 20 or the 150-day one, right now it's just dipping, right? And we ended up touching the $940 level. Now, so something significant that people once talked about is the fact that Tesla has this gap right here. This gap formed on the 22nd of December, and this gap starts at 940. So this could be an indicator that we may start running up. But the problem is, guys, it's very hard for people to really make that call. And currently, Tesla is down about 5.26%. But don't just look at Tesla, guys. Tesla is not all there is to the market. Look at AMC, it's in the red. Look at Apple, it's in the red. Amazon in the red. BBIG, crypto's in the red. The Nasdaq is down 2.72%, and look at the S&P 500 down 1.96%. So this is one of the most significant things I need to talk about, guys, because we have something very important to discuss. Look at this right here. Right now, if you look at the 1-year chart, guys, we have a very similar trend that was playing out. So I can actually go further back and show you guys something interesting. For the past year and a half, since I would say the end of June of 2020, I would say the 150 moving average, that was basically a very strong support for the S&P 500. It worked that time, and then the S&P was just going up and up and up and up, and we didn't actually touch it for a long period of time, right? And then what happened was, right over here in September, we came very close to touching it, but we ended up bouncing off of it. Then we end up kind of dipping again. We don't touch it for so long. What I'm trying to tell you is we didn't touch this line for over a year and a half. And all of a sudden, we dipped. We dipped hard and below it, far below it, which is showing a very significant move to the downside, right? We had a very significant move over a very short period of time, which is showing that the S&P is looking a little bit bearish right now. Now, I want to talk about this right now because this is very, very important. This is very important for all investors to be looking at. So look at this right here. As CNBC has been reporting, I did also talk about this in previous videos. Markets are expected to remain on the edge as the Fed meets in the week ahead. So the Fed has some very important meetings, guys, on Tuesday and Wednesday. Now, I'm not guaranteeing that the market's going to crash because of that. That's not a guarantee. But I do want to talk about what this means. So what's happening right now, guys, the market is in a very uncertain state right now. A lot of people don't truly know what's going on. We don't know to what extent the Fed is going to be raising the federal funds rates, which in turn is going to affect interest rates in America or the cost to borrow money. That's starting with the banks in America, and we're already seeing mortgages starting to go up as a result of them preparing for this change. So what does this mean going forward for Tesla and other stocks? Well, we're seeing mid-cap and small-cap stocks being hit really, really hard right now. And Tesla in turn is also getting hit as the Nasdaq is taking some hits too. Now the S&P is looking a little bit bearish, and I do think that if the Fed announces something dire, if they do actually start announcing to what extent they're actually raising these rates, it's really going to have its toll on the market. Now, here's something important about the S&P that I forgot to mention. The S&P, guys, it often reacts, or if you look at the last like 20 years, when the Fed ends up raising rates, the S&P would often react after. But now the Fed hasn't raised rates yet, and the S&P is reacting early. And that's because of uncertainty, fear, uncertainty, and doubt, and also because of big market makers that learned from the past. They know exactly what effect this is going to have. They know institutions are going to be moving money around, and there's so much, how should I say, a lack of liquidity in the market. Now, another big factor that a lot of people overlook is what the Fed has been doing, and they have been doing some very unsustainable practices, in my opinion. What is an example of that? Look at what happened since 2018, since Jerome Powell was in, guys. The Fed has been printing money like crazy. We didn't start printing money like crazy in 2020. We've been doing it since 2018. And they've been using this money to basically avoid recessions and really help the SPY and the NASDAQ and the entire market run like crazy. If you look at the market over the last year or so, there was so much printed money that was used to really help it run to the upside. And it appears like we're running out of liquidity to keep this train rolling. So the lack of liquidity, and also, guys, the fact that a lot of these massive institutions and hedge funds, they're over leveraged in their positions, and they were depending on alternative forms of income from China, Chinese money, because of the Evergrande situation, guys, because big Chinese bond issuers are going bankrupt right now. They're in very bad situations. This is causing a lot of hardships for big institutions in America. So they're moving money around, and that's causing the SPY to drop hard. When they move money around, guys, that's affecting Tesla. Tesla's also taking a big hit, even though this company has done nothing wrong. Tesla is not a victim. They're not necessarily doing anything wrong. It's not Tesla's fault, guys. So don't look at Tesla as a bad company because it's dipping. This is happening to the entire market. Look at this right here, guys. Electric reported that Tesla aims for a new Model Y delivery, or I'm sorry, a few Model Y deliveries from the Gigafactory in Texas by the end of the quarter. They're already crushing it. Their fundamentals are getting better. And remember, they have two major factories, right? They have one in Shanghai, China. They have another one in Fremont, I believe that's in California. So they have two gigafactories right now, and they have two more that are scheduled to be opening this year. That's super bullish news, guys. Super, super bullish news. And even if it doesn't show itself this year, even if Tesla doesn't have a major, major move to the upside this year or for the next few months, eventually it's really, really going to explode. Because remember, guys, the market is a slingshot. I know that sounds oversimplified, but believe me when I say that, the market is a slingshot. If you don't believe me, look at the S&P from the past. I'll show you what I mean by that. You can look at the max chart from TradingView. I'm not TradingView. I'm using Webull, but look at this. It's like a slingshot because we could dip really hard, just like how we did in 2009, but then we had a very, very fast recovery. This was within 1 year, we had a start of a recovery. Within 2 years, we had a straight up recovery, moving to all time highs again. So, what I'm trying to tell you is look, the market could dip. Tesla could dip, but it's going to have a very, very fast recovery. It's also going to be a hedge to some degree to the market because it's not going to crash too hard. That's what I believe. I still have that conviction, guys. And I could be wrong about that, but like I told you guys, it's not going to be too bad because the lower this thing goes, the more buying there's going to be. And I see a lot of people seeing Tesla as a security, something that's going to keep their money secure. Now, that doesn't mean it's not going to dip a little bit more. We can continue to see some red for next week. But the thing I want to pay attention to, and the thing I want you guys to be prepared for, is when the Fed has these meetings on Tuesday and Wednesday of next week, this could cause the market to dip. But then we do have the earnings report from Tesla that could still cause this thing to run up, guys. We could still run up to key levels. But the thing that's important, and I know this sounds trivial, but $1,000 is the key level of resistance we're going to have to break. I do believe we could break that if the earnings report is really good, especially if other tech stocks have really good earnings. Because I think other companies like Apple have earnings. I'm not sure about Apple, but I know Tesla has it on Wednesday next week. That could really cause this thing to rip to the upside. Now, we're also going to have, I believe, resistance at around the 1,050 and the 1,100. If the news is that good, guys, if Elon Musk announces something amazing, this thing is going to break past all that. We could still run to the 1200s, guys. It still is possible. It's possible. It's definitely possible if the news is that good, but it's really dependent on that, and it's going to be a little bit trickier for us to run to really high levels because of this market, guys. The market is not in the best of positions. So that's what I have for this one. But the one thing I want you guys to remember is when you invest in a company, look at Warren Buffett's strategy. He doesn't just invest in anything because he likes the company or like that. He invests in companies because he looks at the fundamentals. He looks at how are they going to improve over time? How does he foresee these companies' share prices going in the future? So if you look at Tesla from that perspective, remember, guys, they're going to have new factories coming out. We're going to have the Cybertruck coming out very soon. We're going to have the Roadster starting production. We're going to have big updates. We have a Tesla bot coming out. We have so many bullish catalysts. Tesla may be unveiling some Tesla headphones. They may be unveiling some new products. The company is amazing. It's absolutely amazing for the long term. So if you're a long term Tesla holder, be prepared for some dips, but don't worry because you know it's going to recover. If you're a day trader or a swing trader, guys, be prepared, guys. Be very prepared for a very volatile market and be prepared for some red, guys. Be very prepared for it. But remember, guys, Tesla is like a slingshot. It's going to dip, sure, but eventually it's going to have a very fast recovery, in my opinion. It's just a matter of time. So that's what I have for this one, guys. Be prepared for anything because the market's in a very dire situation, and I don't necessarily know if I can make a true prediction, right? I know people, they want me to make predictions. I can't always do that. And the reason for that is because I don't necessarily know what the Fed is going to announce. Now, what do I think is going to happen if you guys want me to take a guess? Because some people want me to take a guess. And my guess is after earnings, guys, we could still see Tesla go as high as 1200. I'll just make that as a guess, guys. And I could be totally wrong. I know that. But I'm just doing it for fun. I know you guys want that. And remember, earnings could still cause this thing to run to the upside. It's just that it's going to be a little bit harder for us to break all-time highs now that we have other levels of resistance to break, like 1000, 1050, 1100, and the 1173 and 1200, right? Very key levels of resistance. We have to break past those. I still think we can if earnings are good enough. And I do predict we're going to have a good earnings, guys, a very good earnings that could really cause this thing to rip to the upside. And I'm still, pretty I would say a little bit more bullish than bearish for next week. I still think that we could rip to the upside if earnings is really good. But with that out of the way, guys, be prepared for the early days of next week, Monday, Tuesday, maybe for part of Wednesday, to see some red. Be very prepared for that because the Fed could announce something crazy. So that's what I have for this one, guys. I want you all to be very, very safe. I wish the best for all of you. I wish you all success and prosperity. And don't let the red scare you. Don't let your emotions get the best of you. Have a plan, really plan it out, and be prepared for anything. That's what I have for this one, guys. Get your game plans on, and I'll see you in the next one. I do believe Tesla's going to go to the moon eventually. Just give it time, guys. It will break all-time highs again, but it's just going to take a little bit of time. That's what I have for this one. I'll see you in the next one. Tesla to the moon, and peace out.